Though Bitcoin remains the most popular cryptocurrency, Ethereum (ETH) is the second most popular digital asset. Ethereum's market capitalization has reached $290 million, up 237% year to date. Hello folks, welcome back to the channel. In today's video, we will bring you the latest news for all Ethereum investors. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. For a brief moment, the world's second largest cryptocurrency kept its new high before falling to about $2,387.17. The achievement of this price milestone is the culmination of a cryptocurrency bull run, or duration of increased value, that began in November of last year when Ether was priced at just $500 per unit. This price swing may seem less remarkable than Bitcoin's recent gains, but since crypto fever resurfaced, Ether has provided investors with a greater return, plus 400%, than its more well-known counterpart, plus 250%. The new price was reached in the immediate aftermath of the Ethereum network's latest update, or hard fork, which took effect with block 12,244,000. The hard fork, codenamed Berlin, implemented 4 so-called Ethereum Improvement Proposals (EIP), aimed at lowering transaction fees, allowing for new transaction forms, and preventing DDoS attacks. The Berlin hard fork, on the other hand, is merely a taster for the summer's more important London update. The network's bid-based fee structure will be completely overhauled in this update, with the intention of reducing congestion and stabilizing transaction costs. Users can no longer pay miners a gas charge in return for a transaction's inclusion in a block. Instead, a fixed fee called base fee will be received and burned by the network, with miners receiving a small and optional tip on top of newly minted cryptocurrency. The London hard fork has received support from Ethereum app developers and users alike, although others have hypothesized that by restricting supply, the implementation of a fee burn would cause the price of Ether to increase. The mining group, on the other hand, is less enthusiastic about the idea. Ethereum is still the most common blockchain for decentralized finance, ETH. It has the distinct advantage of being the first to market, which means that many investors are already familiar with ETH and its applications. ETH tokens have played a part in the 2017 and 2018 token sale bonanza and are now becoming more involved in their current role as the DeFi market's backbone. In the last year, the DeFi market has expanded by leaps and bounds, with the value locked having increased by more than 50 times. This industry, on the other hand, is made up of a loose network of interconnected projects such as lending, algorithmic trading, and yield farming. Maker and Compound have risen to the top of the lending industry. The Uniswap exchange is the world's leading electronic market-making platform. Yield farming ventures are still vying for the top spot, but the total valuation of tokens has surpassed $19 billion. DeFi's popularity is fueled by the size and rapid growth of decentralized token-based projects. According to DApp Radar figures, not only are active users increasing, but there are also users who are really active on social media. This raises DeFi's profile, and for others, its large returns. The issues aren't secret either, especially when it comes to the high gas fees associated with using ETH or sending tokens. Only the top 10 DeFi distributed apps account for about 90% of Ethereum network transfers in 2021, indicating that Ethereum is primarily about DeFi in 2021. When opposed to its rival, EOS, the Ethereum ecosystem has roughly 10 times as many projects. It's worth noting that Ethereum is still the leader in total value locked, according to the DApp Radar survey. The bull market in Q1 that brought ETH above $2,000 is one of the reasons for this. The value locked serves as leverage for lending ventures, as well as a source of stability for the DAI dollar-pegged asset. However, as of Q1, there are signs that Ethereum is facing increasing competition in the DeFi space. Binance Smart Chain, in particular, has begun to host DeFi ventures, increasing both its active users and the value locked. The value locked on Binance Smart Chain will develop in tandem with the value of Binance Coin (BNB). PancakeSwap is quickly becoming a high-profile trading hub as more ventures enter this alternative blockchain. Institutions are also hesitant to pursue a DeFi strategy. Trading ETH is well known, and there are already products like Grayscale's funds and XBT providers' exchange-traded notes that provide mainstream investors with exposure to ETH price fluctuations. However, no signs of major organizations backing collaterals or investing in DeFi ventures have been found so far. DeFi's notoriety as a haven for almost limitless gambling is one of the reasons for this. Liquidations and losses are also causes of significant uncertainty that are beyond the reach of most investors. However, mainstream investors are becoming interested in the resources that are being built on Ethereum. The Ethereum ecosystem is colliding with the growing interest in fintech, where pocket investment apps are attracting a new generation of tech-savvy investors seeking higher returns. To begin with, Coinbase, a prominent crypto exchange, announced the start of Ethereum 2.0, staking for its users on the waitlist yesterday. Qualified Ethereum holders on Coinbase will be rewarded with a 6% annual percentage rate (APR) for their staked ETH. Users in the state of New York, however, are currently unable to stake Ethereum. Furthermore, there is no minimum amount of Ethereum that can be staked on Coinbase. Instead of using their entire bag of Ethereum, users can choose to stake a portion of their ETH holdings. The 3 Ethereum ETFs will be available on the Toronto Stock Exchange, providing exposure to Ethereum to Canadian investors. In terms of price, Ethereum has surpassed its previous high of $2,548 Binance Pace. The new ATH was set yesterday before news broke that Turkey had banned the use of cryptocurrencies as a means of payment. Due to the reports, Ethereum fell to a support level of $2,300 before bouncing back to a local high of $2,495. The weekly close is just a few hours away, and Ethereum is currently trading at $2,553. As a result, the aforementioned $2,300 will be a price area to keep an eye on as Ethereum tries to transform $2,500 into a support zone. The Ethereum DeFi ecosystem has proved to be extremely durable. The network remains appealing through liquidations, high fees, and outright scams. However, as demonstrated by the emergence of the Binance Smart Chain, the consumer has spoken with its wallets. The DeFi and algorithmic trading method is well known, and it can be applied to any network. Even older projects such as VeChain, Steem, Ontology, and IOTA are shifting their focus to include a DeFi portion. Although Ethereum is currently in the lead, its competition is thriving. Binance Smart Chain, which was created specifically to host DeFi and quick dApps, is even ahead of Ethereum because it skipped the mining stage and began with various types of proof of stake. The only thing left is for DeFi investors to realize that they can get the same returns on other networks, allowing them to leave Ethereum-based DeFi in favor of newer ventures. Ethereum is an important part of today's cryptocurrency ecosystem since it is the most widely used blockchain network for decentralized finance applications. The digital currency's usefulness is bound to grow over time as a result of its position in powering dApps, which will have a significant effect on its future price outlook. The Berlin update is also a forerunner to the EIP 1559 protocol's eventual rollout. The protocol would change the way Ethereum payments are charged and add a burn feature that will transform Ether into a deflationary asset. All of this points to the coin having a promising future as the crypto space matures. Price predictions. The price of Ethereum has been on a roll, reaching an all-time high of $2,553, despite several failed attempts to break through the $2,000 barrier. A slight retracement is now possible for ETH. The preemptive top signal generated on the one-day chart by the Moment Reversal Indicator (MRI) is primarily responsible for this bearishness. A yellow 1 candlestick appears in this configuration, indicating that the rally is nearing its end. A 1 to 4 candlestick correction appears possible if this indicator creates a red 1 technical formation. Investors should expect the smart contract token to correct to the immediate support given by the MRI's breakout line at $2,345. However, if sellers outnumber buyers in this range, a fast pullback to the demand zone's upper band at $2,150 appears possible. If ETH breaks through its recent high of $2,553 in a convincing manner before reaching the demand zone, the bearish outlook will be invalidated. If this occurs, Ethereum's price could be on the verge of a new bull run. As a result, investors should expect this pullback to be a temporary setback before buyers reclaim control. As a result, a decisive close above the all-time high would propel this uptrend toward the $3,000 mark, which corresponds to the Fibonacci extension level of 127.2%. This upswing may see consolidation around the $2,700 level, allowing more market participants to accumulate Ether until it reaches a psychologically significant level. We expect the growth of cryptos like Ethereum to continue as more individuals and organizations embrace digital currencies. It's possible that ETH would hit $3,000 sooner rather than later. If you're looking for a long-term investment, buying the dips is a good idea. Yes, the value of Ethereum fluctuates. Because of the year-long rally, ETH is expected to be choppy in the coming weeks. Its price chart shows that regular fluctuations are big, and the next move's direction often surprises investors. As a result, short-term traders should exercise caution. And with that, it's time to end the video. We hope this session was informative. Do let us know in the comment section below. Subscribe for more content, just like this one, and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.